So the latest GDP numbers actually look pretty good for the Biden administration. It showed that GDP grew by 2% in the first quarter of this year.
I'm Jim Antle. I'm joined today by economics reporter Zach Halaschak. Zach, what President Biden has been trying to stick this soft landing with the economy, keep the economy growing, lick inflation. What do the latest GDP numbers tell us about the prospects for that?
Yeah, so the latest GDP numbers actually look pretty good for the Biden administration. It showed that GDP grew by 2% in the first quarter of this year. That was after 2.3% growth in the fourth quarter of last year. But it's key to note that it was positive. Typically a recession, and when you say soft landing, what that means is basically trying to get inflation down without causing a recession, without causing the economy to careen down. And a key metric of that is 2 quarters of negative GDP growth. So if gross domestic product falls one quarter and then falls a quarter after that, it's typically seen as a rule of hand for a recession. And so this being 2% growth just shows that's not yet happening.
So we do have inflation going down. We still have the economy growing despite interest rate increases and things like that are designed to counteract inflation. But there are some other metrics that people are looking at when they're trying to assess the health of the economy. One of them is the housing market. What are we seeing there?
Yeah, so the housing market's interesting. It's not in very good shape compared to 2 years ago when mortgage rates were very low because the Fed had slashed interest rates near zero. But it's still holding on, but there's some key parts of it that are not doing great. One is that people aren't buying as many houses as before. They're not going out spending that money. And then, like for example, new houses, while there was a report out that showed recently new home sales are growing, that's largely because existing homes aren't being sold as much because people who locked in those 3% mortgage rates back in 2020 and 2021, they're holding on to their houses. They're not looking to sell their houses that are already built. So you're having this demand for more new construction. So when you see the report saying that new home sales are growing, you have to take it with a grain of salt and know that on the other end, existing home sales aren't doing as well.
What, if anything, does that tell us about the prospects of a recession?
I mean, it's the housing market itself more broadly is kind of a forerunner for a broader recession. It's one of the most reactive sectors when it comes to interest rate changes. So Fed's been raising interest rates since March of last year. And so that the first sector that's really was felt was the housing market because mortgage rates go up, make it more expensive to buy homes, make it more unaffordable for home buyers. And then that filters through the broader market. So when home prices go up and there's less demand for homes, construction slows down, dries up, those jobs get lost in construction, people don't have money to go out to the store and spend money at the restaurants, and restaurants start, so it's like a chain reaction, but the housing market's kind of where it starts first being felt. So it's a good indicator of what could be to come down the road.
So let's talk a little bit about ESG, which I've learned is not what makes Chinese food taste good, but is actually a burning social issue, could be very big in the 2024 campaign. And there's a prominent voice that doesn't want to use this acronym anymore.
Yeah, Larry Fink, who's the CEO of BlackRock, the biggest money manager in the world, and he's arguably one of the most influential business people in the world. This week he was asked about it, and he's kind of become the figurehead for ESG, which stands for environmental, social, and governance. ESG itself is kind of a set of principles that companies have come to embrace, which is basically affecting social change, like trying to mitigate climate change through capitalism and not through direct government action. So, for instance, a company would say, we want to invest in less companies that are in the fossil fuel industry by 2050. So we're going to peel away investments to fossil fuel companies. That would be a form of ESG. Anyway, Larry Fink has kind of become the figurehead for this because he was spearheading the efforts to do that. And then in response, a lot of Republican groups, Republican state lawmakers, Republicans attorneys general, state treasurers, they've started pushing back on ESG. And BlackRock itself has had billions of dollars in divestments from states, most recently, or most prominently Florida, which divested $2 million from the firm. So he's really feeling the burn from this. And when was asked about it, recently, he was saying that basically he doesn't want to be part of that conversation. He feels ashamed that his name is part of this political conversation now outside of just the corporate realm. And really, he never said he's going to change those policies. That's the key thing to realize. He said he was going to start using the term because he feels like the term has become politicized.
Sure.
But it doesn't look like BlackRock has any plans to change their actual investment strategy because of this pushback.
And it's controversial, one, because it's using something in consideration other than profits, and two, because people feel that you're trying to shape behavior and economic activity based on certain social goals.
Yeah, exactly. People don't like it because when shareholders invest money into a company, the thought is traditionally been, those people running the company are trying to give you the most money as possible, get the biggest, maximize shareholder value and shareholder returns. So critics of ESG kind of see it as using the money of shareholders not to make as much money as possible for them, but rather to affect social change that maybe that shareholder doesn't agree with. Maybe that shareholder doesn't want their money going toward mitigating climate change, for instance, and would rather just put in their money and get the returns. And so that's kind of the crux of the
argument.
Pushback against it, yeah.
Thank you, Zach.
Yeah, no problem.
You can read Zach and the rest of our policy team's coverage at washingtonexaminer.com.